Well, for today, the market will maintain its current trend. Just before I came here, I mean, the indicators were showing me that the market is still maintaining its downward trend. This is because there is, due to the renewed activity at the bonds market, I think the investor appetite right now is more on bonds than it is to equities. So going forward, I mean, even for the week coming, I expect the trend to still continue.
We saw EABL, that's East African Brewery, is raising beer prices by 13%, which is quite a big increase, isn't it, for a market that's still trying to recover and actually get the economy growing again?
Yes.
Are you surprised by the price increase that we saw from EABL?
No, I'm not really not surprised, because looking at the year-end results for financial year 09, I mean, we did see a drop in top-line revenues, and part of this is because of what is happening in the commodities, basically the cost of barley. Now, I think that particular pressure from the cost of raw materials is what has led to this current move for the company to actually increase the price of beer. And also, as you remember, they really focused more on the cost leadership issue. So going forward, we do expect that they are going to maintain this particular strategy. And due to what you're seeing from from the international markets, the cost of barley going up, that is going to be a key cost pressure for the company. So we are likely to see that investors in the market are going to react to this, because in actual sense, we saw the counter is trading a shilling lower. So that is going to hover around that particular spread.
But are you surprised by the fact that it's trading a shilling lower when it's actually raising prices? Because that appears to me like, straightforward strategy. The money goes down straight to the bottom line.
Well, it's keen to know who is actually pushing the price down, because you see, for that particular counter, it's a blue chip counter, and most of the investors who go into that particular counter are in there for the long term, because it has a better dividend yield. It has a better, I mean, the returns in terms of investments are good in that particular counter. So the reason from that particular point, if speculative investors tend to dominate such a counter, and they are reacting to that particular information, then we'll tend to see that sharp slight drop. Then it will correct as the week goes by next week.
With the market trading sideways, Henry, do you get a sense that perhaps it's because investors are sort of distracted by all these bonds that we've seen coming into the market? We have Kenyan, we have Safaricom, and I saw this morning we also have East Africa Portland Cement planning to issue a convertible bond.
Well, it is because the two sort of markets, be it the equities or the bonds, are competing, let's say, for the same share of capital. So for an investor deciding on which particular mode of investment vehicle to use, they're looking at the returns. Right now, the equities do not offer the returns that one would be looking for. So with these offers that are coming in, and which have attractive interest payments, I mean interest rates for investors, we tend to see there's a shift. There's a sort of a capital shift from the equities to the bonds, and this is what perhaps to a certain degree is contributing to the fall of the, to the increased downward pressure for the equities. And this is likely to be sustained, partly because we look at most of the companies listed, people are waiting for Q3 results from the bank, so from the banks. So that is going to provide an impetus if that particular trend is going to be reversed, either partially or fully. But for now, the bonds are likely to carry the day.